In the UK, Deliveroo has blamed increased consumer headwinds for a cut in its forecast, marking the latest setback for the online food delivery company. The London-based company said growth for the entire year will be between 4 and 12% on a constant currency basis, more than halving its earlier prediction of between 15 and 25%. Its gross transaction value is a measure of the orders placed through the company's platform. For more on these headlines, we're going to cross over to London, where we're joined by Lukman Otunuga, Senior Market Analyst at FXTM. Lukman, good morning to you. How are you seeing the markets? Looking bullish?
Good morning, Voters. It's a pleasure to be here today. Yeah, the mood across markets this morning is bright like the British weather. You know, the sun's out. Equities across Europe are shining. US futures are pointing to a positive open. The reason this is because investors seem to be scaling back bets on how aggressively the Fed may move ahead with raising interest rates, and this is offering some relief to financial markets. Last week we had positive US retail sales, and there was a drop in long-term US inflation expectations, and this seems to be offering some support to equity bulls. However, though, as you mentioned earlier, the key fundamental themes that are weighing on sentiment are still present, so this relief rally could have its legs cut short, if not today, over the next few days.
Thanks for that. Well, how are you seeing currencies and the rise of the dollar? A bit of appreciation for the other currencies this week, but how are you seeing things on the currency side?
Yeah, certainly. Over the past few days, we saw the dollar slightly weakening. This is based on inflation and Fed expectations. But overall, though, the mighty dollar still remains king of the FX throne. We have uncertainty that still remains the name of the game, recession fears, and this risk-off vibe with market speculations rising over the Fed still moving ahead with a 75 basis rate hike this month. When you factor in the widening interest rate differentials, the dollar is likely to recover after this short-term weakness, and this should enforce further downside pressures on other G10 currencies.
All right. We haven't talked gold in a while, and I think it's fallen below 1,800 now. It's like 1,700 levels, which is amazing since inflation is rising. You would think there'd be more investors piling into gold. What's your thoughts on the gold's trend recently?
Certainly, it seems that gold is struggling to really take advantage of these inflation fears. We know that gold is a hedge against inflation, and as the dollar weakens due to rising inflation, this improves the allure of gold. But gold continues to struggle against an appreciating dollar on rising yields. That's the major thing. And as yields continue to rise on the back of the Fed adopting that aggressive approach towards rate hikes, and the dollar continues to steal some of gold's safe haven flows, I think gold is likely to remain depressed and unloved. Prices are trading around that psychological 17-0 level, but if the dollar continues to appreciate, the path of least resistance for the metal points south.
Interesting. Oil, I guess, what do you make of oil prices recently, and then the Saudi comments after Biden left Saudi Arabia for his visit?
It's funny, this jigsaw puzzle, the people in Saudi are saying one thing and Biden is saying another thing. I think the key takeaway was Biden said that further steps are going to be enforced in the coming weeks to improve, to increase the oil production, while Saudi are saying that they're in control of what they need to do. But ultimately, zooming out, taking away all the politics, we can see that oil prices remain heavily influenced by the global outlook. Last week, economic growth from the second largest economy was quite disappointing, and we know that China is the world's largest consumer of energy. So more slowing growth from China is likely to push oil prices lower, despite the ongoing geopolitical risks revolving around Russia and Ukraine. But on the bright side, though, in the longer picture, if you look at what happened back in 2020 when there was a drop in oil investments, and the fact that market conditions are still tightening, I still think oil has a way to go before stabilizing around the $100 to $90 level in the medium to longer term.
The ECB rate hike is expected this week. How do you think markets are going to take it in, and what's the reaction?
Certainly, there's so many dimensions we can take this. It's good that, for the first time in almost 11 years, the European Central Bank is widely expected to raise rates by 25 basis points. However, though, it still remains negative territory. meaning that the divergence in monetary policy between the Fed and ECB still remain quite wide, resulting in more euro weakness. The ECB is in a very tight position. If it allows the euro to weaken, this is going to result in rising inflationary pressures. However, if it tries to fight back with higher rate hikes, a 50 basis rate hike, this could push the economy that's already in a recession in a more tricky position. So I think markets and everyone will be paying very close attention to what Lagarde has to say and a new tool the European Central Bank's implementing to fight the rise in bond yields.
The global tech stocks losing about $500 billion in market share. We've seen the issues that are going on. What do you make of the struggle that tech stocks have been facing recently?
It's been terrible, Rotas, really. And just look at the Nasdaq alone; it's down roughly 27% year to date. But going back to the fundamentals, we've got rising interest rates, recession fears, and soaring inflation, which creates a poisonous cocktail for tech stocks in general, for high growth stocks. And I think this overall unfavorable market economic environment is likely to encourage investors to keep a safe distance from these, growth stocks until some normality returns. I think as long as recession fears remain a key theme, inflation continues to rise, why would investors dabble in high growth stocks when there are other more stable stocks out there that may perform stable or, better in times of recession?
I want to go back to the EU. Are markets, are you optimistic that they can reach an agreement, I guess, with Russia to allow Ukrainian grain exports from the Black Sea ports?
I mean, this is a really big thing because we're seeing a sense of positivity today, but, I don't know if it's based on the recent reports we've had about, as you said, the EU's foreign policy chief saying he was hopeful that, Russia and Ukraine could clinch a deal on this. We have to keep in mind that this goes beyond political. The lives of tens of thousands of people depend on this agreement. If this agreement doesn't go through, this could result in more inflationary pressures across the world, dragging the global economy into a more unfavorable position. There is a sense of optimism, but, time will tell. We don't know yet, personally.
All right, and I don't ask you about politics because you're a markets guy, but I have to ask because it's making headlines anywhere. Who do you think is likely to replace Boris Johnson? There's another round of voting today.
Well, I'm really watching this very, very closely. As you can see, I have to choose my words very wisely. But with UK politics, it's best to always expect the unexpected. The crazy developments we've seen over the past few weeks is a testament to this. As I said earlier, we've got 5 candidates. We've got Rishi Sunak, Penny Mordaunt, Liz Truss, Kemi Badenoch, and Tom Braverman. Rishi Sunak remains in lead. And bookies are saying that he's the favorite to be the new prime minister, but we have to keep in mind that there's still an extended window. The announcement is expected to be on the 5th of September, so we've got more than over a month for anything to happen. If things continue to be how they are right now, it could be Rishi Sunak, but as I said earlier, to protect myself, I think it's always best to expect the unexpected.
Yeah, we want to protect you too. Lukman Otunuga, Senior Research Analyst, FXDM. Lukman, thanks for joining us. Appreciate your time.